It's been a week of highs and lows for global financial markets, with differing views of how the coronavirus, or COVID-19, might impact the outlook for global growth. US equity markets have made fresh all-time records on the basis of strong domestic momentum and the lower level of dependence on Asia for growth. Here in Australia, the ASX has made fresh all-time highs on hope that Chinese stimulus to offset the impact of the virus will boost activity. Contrast this positive outlook with gold, which has risen to 7-year highs on concern about the spread of the virus in the likes of South Korea, Japan and Singapore, and the Australian dollar, which has sunk to fresh 11-year lows. Now, a good part of this sharp drop in the Aussie dollar can be explained by the strength of the US dollar, and the US dollar is indeed strong, having hit close to 4-year highs this last few days. The US dollar is being helped by a long list of reassuring domestic data points, including a sharp lift in January building permits to post-crisis highs, a solid rebound for the February New York Empire survey with new orders at 2-year highs, and the Philly Fed business survey, which surged to the second strongest month since 2014. On top of this, the lack of clear leadership within the Democratic primary race is playing into a keen sense that politics is not as big a risk as it might have been for the US economy this year. This very much contrasts with the vacuum in German leadership transition post the shock resignation of Merkel's anointed successor Annegret Kramp-Karrenbauer last week, and weakness in German data, for instance, has been a factor leading the euro to 3-year lows below 108. However, domestic factors have also played a role in the weakness in the Aussie dollar too. With 78% of Australia's exports headed for Asia, we need to be braced for further news of disruptions to manufacturing supply chains and extended weakness in education, tourism and business travel. The Australian government yesterday announced that it would extend the travel ban for foreign travellers coming from China until the end of February, which will have a huge impact on foreign students returning to Australian universities for the start of term. In domestic data, January employment rose as economists had forecast. However, the unemployment rate jumped, reversing the recent decline, and hours worked fell. The underemployment rate also moved higher in January, rising from 8.3% to 8.6%. The ABS noted the bushfires did not have a notable impact on key headline statistics in January, so analysts will be braced for signs of an impact from the bushfires and the virus on travel, tourism services and exports in February. One positive note on export prices for Australia has been iron ore markets. While the likes of copper and oil are well below the levels prevailing before the outbreak of COVID-19 was confirmed, iron ore has bounced back to levels seen before the Lunar New Year break. We put this down to the impact on supply as a result of damage sustained by Tropical Cyclone Damien, which swept through the Pilbara on February the 8th. Our analysis of shipping data points to no exports of iron ore for 7 days from Port Dampier and Cape Lambert losing 6 days of exports. And Rio essentially confirmed this during the week as it slashed its target for this year's iron ore production by between 6 and 9 million tonnes due to cyclone damage. And next week the focus will turn to partial inputs into Q4 GDP for Australia, with construction work done data on Wednesday and CapEx survey on Thursday. In the US, we have another Democratic presidential debate in South Carolina on Tuesday, where political analysts will be closely watching Michael Bloomberg to see if he can lift his performance after a very poor showing in Las Vegas this last week. In Asia, the Bank of Korea meets to set policy rates Thursday with a backdrop of a collapse in exports and a sharp rise in confirmed COVID-19 cases. The Standing Committee in China meets Monday to consider a delay to the annual meeting of full Parliament due to the coronavirus outbreak. The plenum is currently planned for March 5. These are all factors we'll talk about in next week's Markets Update.